You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Right now in the marketplace, there's an abundance of diesel catalytic converters with no place to go. Smelters don't want them. It's problematic on the processing side. So there's an issue there. They're going to go into landfills or else what? So our solution is we're going to be the only solution which will have the ability to process diesel catalytic converters. So that's pretty attractive when you're looking at a business perspective. With that, if we're looking at a $10 million first year revenue, use a 15 multiple, that should, with those numbers, easily give us a 50-cent stock. That's a rough guesstimate, of course. I mean, these are, if the numbers fit in, right now we're an 8-cent stock. It's very attractive, obviously. The future beyond the first year is obviously pretty aggressive growth. I won't even go on to what could happen in the future, but if we do what we say we can do in our first commercial plant, I mean, the world's our oyster.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, and in today's show, you'll be getting an introduction to a new company that I'm looking at investing in and taking on as a show sponsor for the virtues and the reasons that you're going to learn about today. Joining me today is Greg Pendura. He's the president and CEO, as well as Rick Purdy. He's the president of U.S. operations of Regenx Tech Corp. This is a rebrand. Formerly, the company was MineWorks Technologies. Gentlemen, thank you for coming onto the show for the first time.
Thank you for inviting us, Bill. Pleasure to be here.
And thank you, Rick. And I enjoyed speaking with you both last week. I like the simplicity of the value proposition. I like that there's near-term cash flow potential, that there's less risk than most mining investments, that it's in the United States. It serves the ESG and green movements, but it's not restricted the way a lot of mining projects are. So for those reasons and others, this is very attractive to me. And I should note, I'm going to be visiting the company's plant that we're going to talk about today. It's in Johnson City, Tennessee. And on June 1st, I'll be down there, boots on site, checking everything out. So, Greg, I'm alluding to your value proposition, but I haven't described it. So could you walk us through, give us a thumbnail overview of what is Regenx and why would investors want to know more?
Sure. Regenx, Bill, is a mineral processing technology company. It's a clean tech company. We've evolved from technologies on the mining side, which has brought us into precious metal extraction. And we've been working for about 3 to 4 years in that regard. And we've completed our pilot plant operations in Vancouver, Canada, very successfully, and I've relocated that facility, that operation down to Johnson City, Tennessee, and we can speak to that maybe later in the show.
So you serve the platinum and palladium markets, and you do this via a relationship with the recycler, Davis Recycling in Johnson City, Tennessee. Maybe speak a little bit to the dynamics occurring in the platinum and palladium markets right now.
Well, the platinum and palladium, as everyone probably is aware, is there's a supply-demand issue here. Especially in regards to catalytic converters, which we are involved in. Our initial focus is on the diesel catalytic converter side for strategic business reasons. But there's a real demand for platinum and palladium. Prices have increased quite dramatically over the last 3-4 years, and all indications are that it's going to continue increasing. And our business model is basically extracting platinum and palladium from diesel catalytic converters in an environmentally friendly manner.
So the flow of product, it's not mined out of the earth. When I'm looking at what we're talking about from the vantage point of a mining investor, you're essentially going to be running a mill, which is going to be a lot more environmentally friendly than a smelter, which typically would recycle the platinum and the palladium out of the catalytic converters. And Rick, can you talk a little bit about your relationship with Davis Recycling? Because your supply of potential product is going to come through this relationship you have with Davis Recycling.
Yeah, for sure, Bill. Yeah, Davis has been in business for many years and has the experience and the relationships all around the U.S. and globally. They're very knowledgeable in the recycling of the catalytic converters, and they're an excellent partner. They're well established and have an excellent reputation.
And so, can you give us an idea of the amount of product that they would be able to bring to you in this plant that you're building in Johnson City, Tennessee?
More than what we could probably recycle. Yeah, their market just grows and grows because their relationships are so strong, and again, they have the ability to service their customers, and that's really important on the relationship side. They're not making any more smelters out there; more refineries aren't popping up, so the supply chain needs to be able to get it to the smelters, and we become basically that for them, a solution on the diesel side.
How easy is it to develop a potential supply of diesel catalytic converters? Can anybody get into the business? I'm asking a question as it relates to the moat. What makes you unique? What gives you a competitive advantage?
Yeah, well, it's not an easy business to just jump into because it's an old business. The recyclers or the supply chain is reliant on relationships that, for example, my dad dealt with this person, so therefore I'm going to deal with this person. It's a trust cash business, and you can't just jump in there and expect the relationships to, number one, trust you, number two, believe that you're going to be in business long term, and number three, be able to have a working relationship that's going to be, long going. Long term.
So the relationship with Davis Recycling, Greg, is one of your key advantages. But another advantage you described to me is the technology that bypasses the need to smelt, and you can precipitate the platinum and palladium. So this is not patented technology, but you described it as proprietary. Can you go into that a little more in depth, please?
Sure. Just to expand a bit on what Rick was saying there, Davis, what they bring to the table is supply chain management expertise. In my mind, this is, it's very scary for a technology company who is into chemical processing to think they can get involved in the recycling business and become a supply chain management expert. It is not going to happen. So hence, that's the real trigger point in our partnership with Davis. They have the expertise on the whole supply chain management side. They know what they're doing. We know what we're doing on the processing side. So it's kind of a marriage made in heaven. It's just it has worked up for the last 3 years. We've worked on a trust relationship with them. That's worked very well. So we're really excited to move forward with them and start a commercial plant and go from there.
Is there any way a competitor could reverse engineer your technology to kind of figure out what you're doing in order to steal market share from you?
Yeah, well, it's difficult. I can't say no because anything can happen. It happens all the time. But what we bring to the table here, which makes it difficult for somebody else to do what we're doing, is simply they need both disciplines. They need the supply chain management side in recycling. They also need the discipline of the chemical technology aspect of what we're doing, and meld both together to achieve a successful end result. So, we look at our we're not going to patent our technology. We look at that as a similar to for an example, a Coca-Cola formula. And there's strategic reasons why we don't want to patent that technology. And I think it'll be very difficult for other people to come into the market. Not impossible, but I think very, very difficult. And the beauty in this business is that there is such a need for a company who has the ability to recycle diesel catalytic converters, that the first player in this game is going to be the ultimate winner. And that's what we're really looking forward to.
So you are the first mover, and you don't require any permits from what I understand either, right?
Well, like any business, you require permits. We've got that.
But no environmental permits, I guess I should clarify.
No, yeah, you're right. There's no environmental permits. It's a basically benign operation, and it's environmentally green. And so we've got no concern on the environmental/regulatory side.
Okay. So you're, unlike a lot of companies I feature on the show, which are exploration or development companies, we're talking about finding a resource, growing a resource, or in certain cases, bringing a resource, a reserve into production. So you are a near-term cash flow story. You have a pilot plant in Johnson City, Tennessee, and then you want to build a full commercial plant. Can you kind of give us a timeline for that? And what is the capital expenditure that you will need?
Well, the timeline on that is where we've just started our pilot plant operation in Johnson City. As I said, the proof of the technology was proven in Vancouver already. We've got no issue there. We know we can do what we can do and extract the platinum and the palladium in an economically viable manner. What we're doing in Tennessee is think of it as a scale up. We are aligning our information so that we understand best through the scale up to better make our commercialization less problematic, if you like. That will complete our commercial design for the plant, which is going to be, we're looking at later summer being able to start procuring equipment for our commercial plant, which will be 10 tons a day.
Rick, you're down in the U.S. Overseeing the U.S. operations. Can you give us a boots on the ground perspective of how things are progressing?
Yeah, very, very well. We've been working really closely with Ben and his team as well on creating efficiencies for the plant. He comes from a very well-versed background on grinding technology and stuff on the cat side. So we're able to glean a lot of that experience and what's readily available out there on the front end from the supply side and getting it into our pilot plant. And our testing and all the different efficiencies that we've learned is coming along very well. So we're very excited.
And what is your JV partnership? Could you break that down for us, the financial partnership with Davis Recycling?
Sure. Yeah, we're at a 55% MineWorks and 45% Davis Recycle.
Okay.
That's the JV. Yep.
And so on the capex spend, then Davis Recycling will put up the 45% as well.
That's the way it's structured. Correct. Yeah.
And then what are the numbers on the full commercial plant build out? What is the capex and what would be Regenx portion of that?
Greg, do you want to speak to that?
The capex we're still fine tuning that, but the capex is going to be approximately $5 to $6 million US dollars to have the plant itself. We're fairly comfortable that we have that funding in place already. The economics are so strong in that regard. We've got very good interest on that side as we speak, both on the debt and on the equity side. So we're pretty comfortable moving forward in that direction with a finance perspective.
Your market cap is Canadian 25 million to 30 million market cap. That's where it's been bouncing around. Investors, when they're looking at a cash flow story, they want to assess the hurdles to cash flow. Are they reasonable and achievable in a reasonable amount of time, which what you're describing seems to be the case here. Then they want to look at the cash flow, especially first year. Is it scalable? And then what cash flow multiple they can apply to it to kind of estimate a return based on a future market cap valuation. So could you address that, please?
Yeah, sure. For first year operations are projected to generate just over $20 million net profits to the joint venture, which is
U.S.
55%.
dollars or Canadian?
U.S. dollars.
Okay. So
for sake of the discussion here, we'll say that the MineWorks or Regenx portion is going to be $10 million U.S. If you want to take a look at it from a price on a price earnings perspective, the average I'll call it multiple for a technology company is around 15. So with that, if we're looking at a $10 million first year revenue, use a 15 multiple, that should, with those numbers, easily give us a 50-cent stock. So that's a rough guesstimate, of course. I mean, these are, if the numbers fit in. Right now, we're at an 8-cent stock. So it's very attractive. Obviously, the future beyond the first year is obviously pretty aggressive growth. So I won't even go on to what could happen in the future. But if we do what we say we can do in our first commercial plant, I mean, the world's our oyster.
And would you need to develop more relationships with recyclers beyond Davis in order to scale up and build plants throughout the U.S.?
I think our partnership with Davis will extend beyond the initial plant. At least I hope it does. And I think they would want to be part of that. As Rick mentioned, they've got relationships on the West Coast, East Coast. It's a very close-knit business, and people know each other. So Davis is going to be getting a lot of calls in the last 6 months about when are we going to get this thing going, because right now in the marketplace, there's an abundance of diesel catalytic converters with no place to go. Smelters don't want them. It's problematic on the processing side. So there's an issue there. They're going to go into landfills or else what? So our solution is we're going to be the only solution which will have the ability to process diesel catalytic converters. So that's pretty attractive when you're looking at a business perspective.
Rick, you are close with the Davis family and Ben Davis, who you've referenced. Their ability to help capitalize their part of the JV partnership in building this plant, that's not going to be a problem for them?
No, not a problem at all.
Okay. And Greg, I also understand that you could be working towards some carbon credits with this business model as well.
Yeah, we're just starting down that road. It's looking very, very, very exciting. That's going to be, I look at as a secondary source of revenue for us. We fit the bill. There's a lot of information that has to be required from the audit side to be able to fit into that program. And once our pilot plant is up and running here, we'll start that process. But yes, we'll be a player in the carbon credit business.
And Greg, before we go, can you talk a little bit about the next 6 months in terms of financing, what's in the treasury, and any more details you can give about how you're going to capitalize the company?
Right now, we're looking at a short-term funding. That'll be disclosed probably in the next couple of weeks. That funding will get us to the procurement of equipment for the commercial plant, and as I said before, the capex for the commercial plant, I believe, is pretty well taken care of. So the funding which we're alluding to now is going to be primarily taking us to the path from now to late summer.
And any inflationary or supply chain issues that could derail your timeline, or is it looking pretty good on that front?
Yeah, no, it's looking pretty good on that front. Everything looks in order. We're going to procure all our equipment this time in the U.S. So we're gonna forego a lot of issues which we had in the past, which created a little bit of a delay for us. So we've talked to most of our suppliers. We just got to fine tune the final bit of equipment that we require for this 10-ton per day plant.
Okay. And Rick, any other insights you can share from your perspective there in the U.S.?
Yeah, I'm excited to have people come on board and just share our story and get involved in as an investor. And we're looking forward to perform and to hit our milestones and really be something that is big picture and be excitable for everybody to be involved. So we want to make some money and be a very successful company. So thank you very much for your time today, Bill. Thank
you, Rick. I look forward to seeing you in 2 weeks in Tennessee. And Greg, thank you for this overview. And I look forward to meeting you 2 weeks in Tennessee as well.
Thanks, Bill. I enjoyed the talk. Thank you.